Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We're excited to discuss Fidelity Solo 401k spouse rules. Can you contribute different percentages for you and your partner at Fidelity? So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Please subscribe on our different channels, whether you're watching us on YouTube or LinkedIn or X, so that you get notifications of when we go live. You can come and ask questions or bring up topics that you want us to discuss. We always appreciate the chance to go over questions or topics. So while you're chatting up your questions or topics, let's dive into today's discussion, which again is today. We want to discuss Fidelity Solo 401k spouse rules. Can you contribute different percentages for you and your partner at Fidelity? So let's first lay the foundation with the scope of what we're here to discuss. So there are different, of course, solo 401k providers out there. Fidelity offers their own basic solo 401k. So it's good to start the foundation, start the discussion with the understanding that a solo 401k is really a legal entity. So it's the documents that create it. So if someone opens up a Fidelity solo 401k directly at Fidelity, that means that Fidelity will use their plan documents to create the solo 401k plan for your business. And then, of course, the accounts will be at Fidelity. Whereas My Solo 401k Financial has its own IRS-approved plan documents, which we use to create a solo 401k for your business. And then we're neutral as far as where the accounts are at. So we've helped customers open up accounts at hundreds of different banks, many different brokerages, including Fidelity. So it's possible to get the documents from us, but have your account at Fidelity. So what we first want to talk about is the basic solo 401k at Fidelity. So that means the accounts that are set up directly with Fidelity that are using their plan documents, because the plan documents dictate what you can do with the plan. So specifically, with regards to making contributions, of course, Fidelity's plan documents do allow for employer contributions, as well as our documents allow for employer contributions. But Fidelity's documents are going to require that when employer contributions are made to the solo 401k, they're made in the same percentage. So for example, the employer contribution limit for a business that's taxed as an S corporation is 25% of W-2 wages that each spouse or business partner receives from the self-employed business. So the question becomes, if one spouse contributes an employer contribution of 25% of their W-2 wages, does the other spouse also need to receive an employer contribution in the same percentage? And the answer is yes, if you're using Fidelity's solo 401k plan documents. So if the solo 401k plan was set up directly with Fidelity, meaning it's Fidelity's documents that govern the account. So if it's Fidelity's basic solo 401k and employer contributions are made to the plan, those contributions need to be made in the same percentage. It's not necessarily the same amount, because one spouse may receive more self-employment compensation. For example, one spouse may receive more W-2 wages from the self-employed business, but it needs to be the same percentage per Fidelity's solo 401k plan documents. Whereas if one were to set up a solo 401k plan with My Solo 401k Financial, but then have the accounts at Fidelity, My Solo 401k Financial's plan documents, our plan documents, allow for employer contributions to be made in different percentages. In other words, each spouse wouldn't have to contribute 25% as an employer contribution, because our plan documents allow for more flexibility. So two spouses or two business partners who are both working in the same self-employed business both participating in the same solo 401k plan, could receive employer contributions in different percentages of their respective self-employment compensation. So if you have a solo 401k at Fidelity, meaning it was set up using Fidelity's basic solo 401k plan documents, it's possible to upgrade the plan to a solo 401k plan provided by My Solo 401k Financial and still have your accounts at Fidelity. So that process is referred to as a restatement. So it's not as if you're shutting down your Fidelity basic solo 401k plan and setting up a new solo 401k plan with My Solo 401k Financial. Instead, the plan will continue, but now the plan will be governed by our plan documents. So you can think of it as a cut and paste, where Fidelity's documents are cut out and replaced with our documents. Now, new accounts will need to be created because those existing accounts that one has for their basic solo 401k from Fidelity's perspective are governed by Fidelity's basic plan documents. Whereas now the plan would be governed by our plan documents, by the plan documents provided by My Solo 401k Financial. So new accounts would need to be set up that are governed by our solo 401k plan documents, by the new restated plan documents. And we help our customers open up those new accounts. Those new accounts can be at Fidelity, and then the cash and assets are transferred over. So you don't necessarily need to sell your investments. The cash and assets can then be transferred over from the pre-existing account for the pre-existing basic solo 401k plan to the new account at Fidelity that's now governed by our plan documents. And because our plan documents now govern the account, now the individual could make employer contributions in different percentages for the respective spouses who are both participating in that same solo 401k plan. In addition, upgrading to our plan will now open up the plan to additional features that are not available with Fidelity's basic solo 401k, including the ability to make Roth contributions, the ability to make mega backdoor Roth contributions, the ability to take a solo 401k loan or invest in alternative investments, as well as qualifying for $1,500 in solo 401k tax credits. So our plan makes the self-employed business eligible to claim $1,500 in tax credits, $500 per year for 3 consecutive years. And this is not limited to just new plans. In other words, a basic solo 401k plan that's upgraded to our plan would also be eligible for the tax credits. Okay, great. So I see we've got a question. Thank you so much for bringing it. Let's go to the question. And then just quickly before we turn to the question, if you're finding this video to be helpful, if you could please like this video on whatever platform you're on, whether it's LinkedIn or YouTube or X, we would greatly appreciate that because that'll help us get the word out to other self-employed individuals, freelancers, solopreneurs, just like you, who may find this information to be helpful. So please like, and then again, please subscribe so you get notifications of when we go live, so you can come and ask questions or hear what other folks are asking or just the topics that we want to bring. We try to bring topics every day that we hope are helpful to our community. So now let's turn to the question. I have a question regarding the process of funding my solo 401k using Fidelity. I'm following the instructions of how to deposit a rollover check using the mysolo401k.net guide. Do I need to include any Fidelity forms with the check I'm mailing to Fidelity? No, it's not required. I would include at least a cover letter, though, where you're directing Fidelity to deposit that check into the correct account, right? Including the Fidelity account number. The Fidelity brokerage accounts that Fidelity sets up for third-party plans are referred to as investment-only accounts. And based on experience and client feedback, those accounts typically begin with the letter Z, like zebra. So if you include that Fidelity account number, that'll be crystal clear for Fidelity where that check needs to be deposited. Great question. Thank you so much for bringing it. So yeah, just to highlight more resources, we have a community with over 30,000 members. It's totally free to join. It's not just limited to our customers. You can easily join it at mysolo401k.net/my community. We have the industry's first AI, solo401k.ai, which is a great way to quickly find resources or find answers to questions. So those are additional resources we like to highlight. Again, please like, please subscribe. Thank you so much for participating today. We'll be back tomorrow. We go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we come back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. Thank you again for all the great participation. And it looks like that takes us to the end of the questions. So until next time, take care, everyone.